We spend a lot of time on financial reporting, obviously, but there's this whole other world now, isn't there? Sustainability reporting.
Oh, definitely.
And it's way beyond just like green marketing anymore.
Investors, regulators, NGOs, yeah, they're taking this stuff incredibly seriously now.
The good question is, how do we actually know if that information is reliable
Yeah,
on the level?
exactly. And that's where sustainability assurance comes in. And it's evolving at lightning speed.
Right.
The need for trustworthy assurance on sustainability info has just exploded. You see it in new regulations popping up everywhere.
Globally.
And just the intense scrutiny from all sorts of stakeholders.
So this deep dive couldn't be more timely then.
Couldn't be, no.
Okay.
Because we're going to unpack a brand new standard, ISSA 5000, designed specifically to bring some much-needed clarity, consistency to this really critical area.
Okay, ISO 5000, International Standard on Sustainability Assurance. Sounds pretty major.
It is. It's from the International Auditing and Assurance Standards Board, the IAASB.
And we've got the basis for conclusions document. What exactly is that?
Think of it as the why behind the what. It's like the official commentary, giving us a peek behind the curtain into the IAASB's discussions, the feedback they got from, all over the world, and the logic that led to the final decisions in ISO 5000.
Gotcha. So our mission today is basically to give everyone a shortcut to understanding the key bits, the main requirements, and sort of the thinking behind this big shift.
Exactly. Saving you from wading through hundreds of pages.
Always appreciated. Now, this wasn't created in isolation, right? Sounds like the IASB talked to a lot of people.
Or absolutely, a massive consultation process. They engaged with a real who's who of global players.
Like who?
Well, organizations like IOSCO, the securities regulators, the European Commission, the ISSB, the sustainability standard setters themselves.
Right.
Even groups like the Global Reporting Initiative, the big accounting firms, you name it. Yeah, this extensive back and forth really just highlights how widespread the recognition was, the public need for a single, global, high-quality standard.
To avoid chaos, basically.
Pretty much. The aim was to prevent a fragmented landscape, different rules everywhere, and just build a consistent level of confidence in sustainability reporting worldwide.
So they started with this core idea, this public interest thing. How did that actually, guide how they built ISO 5000?
That's a really crucial point. The IASB explicitly used its public interest framework, the PIF, as a guiding light, really, throughout the whole process.
Okay.
And this framework, it's all about making sure the standards they set ultimately serve the broader public good, not just one group.
And what does that look like in practice for a standard like this?
Well, the PIF highlights several key things a good standard needs, like timeliness, getting it out there when needed, but without rushing it, obviously.
Quality matters.
Exactly. Then relevance, making sure it tackles current issues, works across different sustainability topics, different reporting frameworks.
Makes sense.
Comprehensiveness, trying to limit exceptions so it applies broadly. Implementability, super important. It needs to be usable by practitioners globally. Big companies, small companies.
Practical, yeah.
Enforceability, clear responsibilities for the assurance providers. And finally, scalability, making sure the rules can be applied proportionally.
So it works for a small shop and a giant multinational.
Precisely. These characteristics were really front and center in the IAASB's discussions.
That totally makes sense. You need something practical, not just theoretical. Okay, let's dive into the scope. I saw something about ISE 3410. That's the greenhouse gas standard, right?
That's the one, yeah. For assurance on greenhouse gas statements.
And its relationship with the new ISO 5000 sounded, a bit tangled up initially.
You're spot on. The first draft of ISO 5000, the exposure draft, it had this sort of carve-out for separate assurance conclusions on greenhouse gas statements.
Okay.
It basically suggested ISE 3410 would still apply just for those specific GHG conclusions. And yeah, that created a fair amount of confusion.
Why? What was confusing people?
Well, think about it. Lots of sustainability reports include GHG emissions info, right? It's often just one part of a bigger picture.
Alongside water use, labor practices, all sorts.
Exactly. So respondents were saying, hang on, does this mean ISA 3410 always applies if there's a GHG conclusion, even if it's inside a bigger ISA 5000 report?
So which standard actually applies when?
Precisely. It led to a lot of uncertainty.
Yeah, you could end up with two different sets of rules for potentially the same data. Doesn't sound efficient.
Not at all. And there were also big concerns raised about the amount of work involved, especially for limited assurance engagements.
How so?
Well, the risk assessment approaches were slightly different. ISA 3410 focused on risk at the GHG statement level. The ISA 5000 draft talked about identifying disclosures where misstatements were likely.
Subtle difference, but could mean different work.
Could mean different procedures, yeah, and potentially different levels of assurance, just depending on which standard you thought applied. Not ideal.
Definitely not. So, what did the IAASB do to untangle this mess?
They really listened to that feedback. They came to the pretty clear conclusion that GHG emissions are sustainability information. It's part of the package.
That makes sense.
And they fully recognize the potential for inconsistency. So the key decision was make ISA 5000 the single overarching standard. It applies to all assurance engagements on sustainability information. Full stop.
Including GHG emissions.
Absolutely, including GHG emissions information, regardless of the form it takes.
Okay, that simplifies things massively.
Yeah.
So what happens to ISA 3410 now? Is it just gone?
Well, as a direct result, the IASB plans to formally withdraw ISA 3410 once ISA 5000 is effective.
Right, avoids having two standards covering similar ground.
Exactly. But the good news is any useful bits from ISA 3410, the practical application guidance, the helpful stuff that's likely going to be repurposed. It'll probably be rolled into implementation guidance specifically for ISA 5000. So the knowledge isn't lost, it's just integrated into this new broader framework. That sounds much more streamlined, sensible. Okay, let's get down to basics then. Sustainability matters and sustainability information. What exactly are we talking about here? Seems fundamental.
Absolutely foundational. The IAASB knew they needed clear, easy-to-grasp definitions that work across different reporting frameworks, but still capture the core idea.
Right.
And put simply, like you said, sustainability information is just information about sustainability matters.
Okay, straightforward enough. But how did they define sustainability matters? Did that definition change at all?
It did, yeah. It evolved. Initially, they took a pretty broad approach.
How broad?
It included environmental, social, economic, and cultural aspects,
Yeah.
plus the impacts of the organization on those things, and the impacts of those things on the organization, okay, trying to cover all bases.
But people had thoughts on that.
Yes, there was feedback. While everyone agreed clear definitions were needed, some felt, including cultural and economic, might make it a bit too broad, or maybe wasn't consistently understood in this context. And many felt the more common globally recognized framing was ESG, environmental, social, and governance. There was a lot of support for explicitly adding governance in there.
So what was the final call on the definition?
They listened again. They refined the definition to be more focused, aligned with that common ESG framework.
Okay.
So the final ISA 5000 defines sustainability matters as centered on environmental, social, and governance ESG matters. They took out the specific economic and cultural bits from the main definition.
Making it cleaner.
Cleaner, more aligned with common usage, and also with what the ethics board, IASB, is using. Any extra detail can then go into the application guidance.
And sustainability information is still just information about those ESG matters.
Still the same. Information about sustainability matters. And they also clarified how these terms link back to the usual assurance concepts.
Like subject matter information.
Exactly. Sustainability matters are like the underlying subject matter, what's being measured. And the sustainability information reported is the subject matter information. It keeps things consistent across all their standards.
That clarity seems absolutely vital. Okay, assurance is all about trust, right? So ethics, quality standards, what does ISA 5000 say about the people doing this work?
You're absolutely right. Ethics and quality management are, well, they're non-negotiable foundations for ISA 5000.
How so?
The standard basically assumes that the whole team, anyone doing quality reviews, will follow the IAASB Code of Ethics for assurance work.
The Global Ethics Code.
Or other rules, laws, regulations that are demonstrably at least as demanding as that code.
Ah, at least as demanding. That phrase again.
Yep. And similarly, the firm doing the work is expected to follow ISQM1, the quality management standard, or, again, requirements that are equally rigorous.
Now that at least is demanding bit sounds like it could be a little subjective. Was there debate about that?
There certainly was. People overwhelmingly agreed ethics and quality are crucial, but they also point out, well, figuring out what's really at least as demanding takes professional judgment, doesn't it?
Yeah, I can see that.
Concerns were raised, especially thinking about assurance providers who aren't accountants. Do equivalent standards even exist for them everywhere?
Good point.
And quite a few respondents actually push for requiring direct compliance with the IAASB code and ISQM1 for everyone, just to remove any doubt or inconsistency.
But wouldn't that potentially limit who can actually do this work, especially globally?
Exactly the problem.
Yeah.
The IAASB realized mandating direct compliance with those specific international standards for everyone worldwide might not be practical.
Why not?
It could restrict the pool of qualified people, maybe in emerging markets, or in very specialized sustainability fields. And it might not fit with existing regulations in every country, even for financial audits. Not everywhere mandates those exact standards for all practitioners.
So how did they find the balance? Ensuring high standards, but keeping it globally applicable.
They stuck to the core principle. Ethics and quality are vital. But they introduced a more nuanced approach, a two-tiered approach.
Okay.
For both ethics and quality management, ISSA 5000 now refers to rules that are either the IEEBA code or ISQM1 directly, or rules that have been formally judged by an appropriate authority to be at least as demanding.
An appropriate authority, like who?
Could be a national regulator, a local standard-setting body, maybe an independent oversight group in that country. It acknowledges the role these local bodies play.
Right, so it allows some flexibility for local setups, but keeps the bar high. What about transparency? Can users see which rules were followed?
Yes, definitely. ISO 5000 beefed up the transparency requirements in the assurance report itself.
How?
It now mandates clearly stating the specific ethical rules and quality management standards used, including where they come from the jurisdiction, and, if relevant, naming that appropriate authority that made the, at least as demanding judgment.
So users can see the exact framework used.
Exactly. Much clearer picture of how the assurance was done.
Okay, moving on. Materiality. Huge concept in financial audits. How does it work for sustainability information?
Every bit as important. Materiality is basically the practitioner's compass, right? It guides planning, performing the work, and then judging if any errors or omissions are big enough to influence users' decisions.
And the IAASB got a lot of input on this.
Tons of input, yeah. From companies preparing the reports, from assurance providers, everyone stressed how critical materiality is here.
I saw a discussion about the entity's process to identify sustainability information to be reported. What's that about? How's it different from the assurer's materiality?
That's a really key distinction. The entity's process is how the company itself decides what topics, what data points are important enough to put in their report.
Their own internal assessment.
Exactly. They might call it their materiality assessment or just their process for picking topics. The IAASB debated how much the assurance practitioner needed to dig into that internal process.
And what did they decide?
They concluded that, yes, understanding that entity process is critical for the assurer. Well, ISA 5000 now explicitly requires the practitioner to check if the entity has such a process before even taking on the job.
Okay, during acceptance.
Right, and then they need to get a deeper understanding of it as part of their risk assessment. But, importantly, the IAASB deliberately used that specific phrase, entity's process, throughout the standard.
To keep it separate.
To keep it clearly separate from the practitioner's own independent judgment of materiality for the assurance engagement itself.
Ah, okay. So the company decides what it thinks is important to report. The assurer then judges if that reported information has misstatements that would be material to the users.
Precisely. The practitioner's materiality is based on their professional judgment about the needs of the report users. The entity's view can inform that, sure, but the assurer's judgment is independent. They might disagree sometimes.
Got it. Now, double materiality. That term is everywhere in sustainability. How does ISA 5000 handle that?
Right. Double materiality. It's looking at impacts in two directions, isn't it?
Yeah, financial impact on the company and the company's impact on the world, environment, society.
Exactly. The IAASB saw that some reporting frameworks, the European standards, are the key example, explicitly require companies to use this double lens.
So assurance needs to match.
It does. So ISA 5000 now has a conditional requirement. It says if the reporting framework the company uses requires both financial and impact materiality,
then the assurer has to consider both.
Then the assurance practitioner must take both perspectives into account when they figure out their own materiality for the assurance job.
Makes perfect sense. The assurance has to align with the reporting rules.
Yeah.
And how does the practitioner actually apply materiality day to day? Is it the same for numbers and descriptions?
Good question. They adopted what they call a bifurcated approach, split,
Okay.
for quantitative stuff numbers. Basically, the practitioner has to determine a materiality level or levels. Set a number.
Like in a financial audit?
Pretty much.
Okay.
But for qualitative disclosures, the narrative, descriptive parts, the requirement is to consider materiality.
Just consider why the difference.
It reflects the practical difficulty, really, of putting a hard number on the materiality of, say, a description of governance practices. It's more about judging significance in context.
And they have to document this thinking.
Absolutely. Document the factors considered or the basis for the numbers they did set.
Okay, let's shift to risk assessment, always a cornerstone. Any big changes in ISSA 5000, especially for, say, limited assurance?
Yes, a really noteworthy shift there, specifically for limited assurance.
What changed?
Well, under the older standard, ISE 3000 Revise, for limited assurance, practitioners had to pinpoint disclosures where material misstatements were likely to arise.
Okay.
But based on feedback, the IAASB decided to align ISA 5000 more with IC 3D410, the GHG standard.
So what's the new approach?
Now, for limited assurance under ISA 5000, practitioners have to identify and assess risks of material misstatement at the individual disclosure level.
Ah, more granular. Why make that change?
Couple of reasons. First, it directly addressed that feedback about different work effort levels compared to ISE 3410. Aligning them promotes consistency, better quality.
Right.
Second, the IAASB feels this disclosure level assessment gives a stronger basis for designing the rest of the work needed for meaningful limited assurance.
A better foundation.
A better foundation, yeah.
Yeah.
And third, it might actually make it easier down the road if a company wants to move from limited to reasonable assurance. The groundwork is more similar.
That makes sense. And you mentioned the practitioner needing to really understand the entity's reporting policies during risk assessment. Why is that so crucial?
Because understanding how the company actually applies the reporting rules, in practice their specific policies, is vital for judging if the information is presented fairly.
It's not just about the framework, but the specific choices they make.
Exactly. The framework gives the principles, but the policies are about the specific measurement methods, valuation techniques, presentation choices, the nitty-gritty. So ISA 5000 now explicitly requires the practitioner to get a thorough understanding of these policies, any changes made, and then evaluate if they're appropriate, if they fit the criteria, if they're consistent.
Kind of like understanding accounting policies in a financial audit.
Very similar logic, yes. It's fundamental.
Okay, what about situations where you need to rely on others? Sustainability can involve super specialized knowledge, right? Or maybe work done by another firm.
Absolute key point, especially with the breadth of sustainability topics. ISA 5000 clarifies things here. It distinguishes between when the main practitioner can be sufficiently and appropriately involved in another firm's work.
Making them part of the team.
Right, part of the engagement team. Versus situations where that level of involvement just isn't feasible. In that second case, the other firm is called another practitioner.
And the standard defines that clearly.
Yes. They updated the definition of another practitioner to be more precise, avoid ambiguity.
And if you do use work from another practitioner, what do you need to consider?
Well, the main practitioner has to check if that other practitioner is independent, if they're competent, capable of doing the work needed.
Due diligence, basically.
Due diligence, yeah. And ensure they meet all the ethical rules about using others' work. ISA 5000 provides a clearer sort of roadmap now, showing which requirements apply specifically in these situations.
I also saw something about one-to-many reports, especially for value chain info. What are those?
This is a really interesting bit. It's aimed at potentially making assurance more efficient in those really complex supply chains.
How?
A one-to-many report is basically an assurance report done by a practitioner on specific sustainability info at one company in the value chain.
Okay.
But it's designed so that multiple other companies and their assurers further down the chain can rely on it.
Like a shared assurance report, sort of like a SOC report in finance?
Conceptually similar, yeah, but focused on sustainability data. ISA 5000 now has a conditional requirement. If you want to use one of these reports as evidence, you need to do procedures to make sure it's sufficient and appropriate for your purposes.
Could be a big deal for simplifying value chain assurance.
Potentially, yes. Could be much more efficient than everyone trying to audit the same supplier individually.
Definitely one to watch. Now, what about big companies, groups, reporting consolidated sustainability info for subsidiaries that must add complexity?
Huge complexity. Yeah, when a parent company rolls everything up, it brings unique challenges for the issuer.
Did the standard initially address that specifically?
Initially, the IAASB thought the general principles might cover it, but they got a lot of feedback saying, no, we need more explicit rules and guidance for group engagements.
So what did they add?
Responding to that, ISA 5000 now includes specific definitions for groups and components, borrowing from group financial audit terminology, which helps.
Familiar terms.
Right. There's also a new conditional requirement for the lead assurer to set an overall strategy and plan that specifically considers the group structure.
Makes sense.
And crucially, it emphasizes clear communication between everyone involved, the lead team, any component assurers working on subsidiaries.
Coordination is key.
Absolutely. And finally, there are specific requirements now about the risks involved in just rolling up, aggregating the data from all the different parts of the group.
That seems really important as consolidated reporting becomes more common for multinationals. Okay, few other key things. What about the link between the sustainability assurer and the financial auditor?
Increasingly important connection. As reporting integrates, they need to talk.
So what does ISSA 5000 say?
There's a requirement now. If the sustainability assurer spots a material inconsistency between the financial statements and the sustainability info, or finds a potential material error in the financials,
They have to tell the financial auditor.
they have a responsibility to communicate that. Yes, unless law or professional rules stop them.
The guidance also encourages just broader communication right from the start during planning.
Good practice. What about fraud and no clear non-compliance with laws and regs?
Yeah, the IAASB recognized that sustainability reporting systems, the controls, might be less mature than financial ones sometimes.
Higher risk of fraud.
Potentially higher inherent risk, yeah. So ISSA 5000 mentions fraud consideration and adds specific requirements for reasonable assurance about management overriding controls. For no clear, it now explicitly requires the practitioner to figure out if any rules require or permit them to report suspected fraud or non-compliance to outside authorities.
Okay. And estimates. Forward-looking info. That stuff's always tricky in sustainability.
Inherently uncertain, definitely. Relies heavily on management judgment assumptions.
So what does the assurer do?
ISSA 5000 requires them to really understand how the entity comes up with the methods, assumptions, data for these estimates, and forward-looking bits.
Understand the process. Understand the process. Evaluate the reasonableness. But the guidance clarifies they're not assuring that the company's future targets will actually be met. That's different.
Right. Crystal ball gazing isn't required. And lastly, the value chain information challenge. Getting reliable data from suppliers, customers.
A persistent headache, yes. The standard acknowledges how tough that can be when you don't directly control those other entities.
So does it offer any help?
Well, the core principles still apply. Get sufficient appropriate evidence. But ISSA 5000 now includes specific application guidance.
Like what?
Practical tips on judging the relevance and reliability of value chain data, testing the company's own processes for gathering it, and even how to acknowledge potential limitations in the assurance report about that data.
Acknowledging the limits.
Yes, provided it doesn't undermine the practitioner's main responsibility to get enough evidence for their overall conclusion. It's a fine balance.
Okay, wow. We have covered a ton of ground there, the thinking behind ISSA 5000. So the big question, when does all this kick in?
The effective date for ISSA 5000 is for assurance on sustainability info, reported for periods starting on or after December 15th, 2026.
So a couple of years out still.
Or for reports at a specific date on or after that date. But importantly, early adoption is allowed.
And encouraged.
And encouraged, yeah. Especially where regulators are moving faster on mandatory assurance. The date also lines up with the effective date for the related ethics changes in the IASB code.
Okay, so it's definitely on the horizon. Let's try and bring this all together. What are the absolute key takeaways from this deep dive into ISSA 5000?
I think the main goal really is to get that robust, globally consistent standard for sustainability assurance that everyone's been asking for.
Meeting stakeholder demand.
Meeting demand, yeah. Addressing the evolving reporting landscape by clarifying the scope, defining principles, adding specific rules for things like materiality, risk, group audits.
It aims to boost quality.
Ultimately, yeah. Enhance the overall quality and credibility of sustainability assurance worldwide. That's the aim.
So for you, our listener, hopefully this has given you a much clearer picture of what ISSA 5000 is really about, the core ideas, the big changes coming.
Saved you some reading, perhaps.
We hope so. Saved you time navigating this really important shift.
Absolutely. And understanding the why, the basis for conclusions we touched on, gives so much context, doesn't it? Not just the rules, but the reasoning.
I couldn't agree more. Which brings us to our final thought for you today. Looking ahead. How might actually implementing ISSA 5000 reshape corporate reporting? And maybe more importantly, stakeholder trust in that information over the next few years.
Good question.
What new questions does this raise for you? What areas might need more exploration as companies and assurers actually start using this?
Definitely food for thought.
We strongly encourage you to dig deeper into the full standard, the related resources. There's plenty more detail there. Thank you for joining us for this deep dive.